Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you would like to receive trading signals from me, myself, or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website. Once on the website, you'll see that we charge a very small fee of $249 for a year's membership. What I'm going to do is leave the website link below this video in the description. So if you do want to join our team, all you have to do is simply scroll down now, click on that link, which will then take you to our website. And then that's where you'll then be able to join our service. Thank you very much. And I hope to see you on our team soon. So guys, in front of me is the gold over the US dollar chart, and as you can see today, we've extended our losses towards the downside, following from yesterday's sharp decline here in the gold markets. We're currently trading at 1868, so we've fallen roughly $10 to $15 in the Thursday trading session. But however, as you can see, we've kind of found some sort of support at the bottom of this blue rectangle that I've drawn, and that's a similar area where we found support roughly about a month to a month and a half ago, which was this area here, which I'll now circle on the chart for you. This blue rectangle that I've drawn on the chart is a consolidation channel. This is where we're kind of just building up base around that 50-day EMA. I don't really expect us to go much lower than this. If we do, it looks to me that we could go towards 1800 all the way down to potentially the 200-day EMA, which is at around that 1760 area. So it would not be good if we got a daily close in this area here, which would then indicate that move lower. But for now, you know, we're still trading healthily within the blue rectangle that I've drawn on the chart. So, you know, it's going to be quite volatile up until next Tuesday, especially with the US election coming up. And typically markets don't do very well, you know, a week to 2 weeks prior to the election day itself. So I'm not surprised by this trading towards a downside. I am a buyer of gold long term. You know, fundamentally, I don't think we've ever looked better for gold. We're in a low interest rate environment, and we've been told by the Fed and by central banks across the world that this environment, this low interest rate environment is going to be here for some time. You know, anywhere between 5 to 10 years. As well as that, we have the US election coming up, of course, where there's a lot of uncertainty as to who's going to win, first of all, and second of all, what they're going to do. You know, Joe Biden, for example, is wanting to implement much higher taxes than they currently are under Donald Trump. So that creates uncertainty in the stock market, and you know, gold being a safety haven, this will then of course lead to more buying of gold, which is a positive. And of course, as well as that, probably the worst news of them all is coronavirus. You know, there's lots of uncertainty of how long coronavirus is going to last, whether there's actually going to be a vaccine. You know, we've been promised by the US government, but there's a vaccine very close. We had Pfizer who were expected to bring out the answers to their second trial of their vaccine this week, but that's been now postponed to after the US election. So there's lots of uncertainty with regards to that. So, you know, this all favors the gold prices and pushes it higher. And as well as that, I forgot to mention, we have the second stimulus deal as well. You know, if we do get that second stimulus deal, that will then result in more printing of the US dollar, which, you know, is supply and demand. The more of something there is, the cheaper the price. So the more dollars that are printed, that will then weaken the demand for the US dollar, and that will then benefit gold. You know, when you know, gold is the reserve currency after the US dollar. So if the US dollar is weak, gold typically fries. So there's many fundamentals that are looking good for gold here in the long run. So I'm still bullish, no interest in selling whatsoever. I think after next Tuesday, which is the US election, I think that gold eventually trades back up towards all-time highs, because I am expecting that second stimulus deal to be agreed in Congress between the Democrats and the Republicans. It's not a question of if, I think it's more of a question of when. So within the next month, I do believe we will get that second stimulus deal. The businesses of America need it. The people of the US need it. And I think that they will get it. You just need to be patient. And once we get that second stimulus deal, I think that then catapults gold back towards all-time highs and trading towards 2,300. So for that reason, I'm a buyer. No interest in selling whatsoever.